Thanks for your company for the weekly this Friday, the 30th of July. My name's Jessica Amir, a senior market analyst with Bell Direct. Well, we saw the broad Aussie share market lift 0.3% from Monday to Thursday. That wasn't much to make a song or dance about, but what was really telling was the mining sector's charge and recovery helped the Aussie share market remain in record high territory. If you looked at the sectors, you'd see the mining sector rose the most, up over 3% Monday to Thursday, taking this sector to its highest ever level on record. While the only other sector that pointed north was consumer services, up a tiny 0.1%. So those were the two sectors in the green. The rest of the sectors in the red, succumbing to profit taking and portfolio adjustments as Sydney braces for another 4 weeks of lockdowns. And caution is also being exercised ahead of reporting season officially getting underway next week. So let's focus on the mining sector for now. The mining sector's gains were not only supported by some mining companies releasing much better than expected results, plus mining companies were also supported by the copper and iron ore prices bouncing back with vengeance. In particular, the copper price surged to its highest ever level since June, $4.60 a pound. That's still in record territory. Why? Well, because China sold less reserves, plus flooding in China in the industrial and transportation hub city of Shenzhou in the Henan province disrupted output and also will increase demand for reconstruction, and that all supported copper's price move higher. As for the best performers in the ASX 200, though, Monday to Thursday, the top three best performers were all miners. Lynas Corp LYC up 12%, Champion Iron CIA up 11%, Oz Minerals OZL up 11% too. All three stocks delivered much better than expected results. The fourth best performer in the ASX 200, a different kettle of fish. The financial software provider Iris, IRE, up 11%. Now, their shares lifted for two main reasons. Firstly, Iris announced a $100 million share buyback that supports share price growth. And secondly, Iris received a second takeover offer from EQT, offering to take over Iris at up to $15.50 per share. Now, that offer was later rejected by Iris. Moving to what to watch next week and beyond, three elements will be in focus. The first is to pause and reflect on the key themes to watch this reporting season, and they are miners, banks, and ASX-listed companies operating in the US and Europe, because miners, banks, and ASX-listed companies in US and Europe will likely see the biggest earnings growth. So let's focus today on miners and banks. Miners, particularly in iron ore, they're expected to rule the roost and report record dividends and cash flow, thanks to the iron ore price rising over 40% this year. Just extraordinary. But some are saying this could now be the final hurrah for miners. For example, this week we saw Rio Tinto report a record payout to shareholders, a 75% payout ratio, in fact, meaning they're paying out 75% of the company's net income. And that's via a $7.60 dividend per share. But record dividends could soon be over. That's if you go by what investment houses Morgan Stanley and UBS are saying. They think Rio Tinto might suffer over the year ahead, and perhaps even beyond that. They expect the iron ore price to halve, and that could be to the detriment of Rio Tinto. Keep that in mind. However, beyond that, on a lighter note, Rio Tinto, they're strategically looking to future-proof the business. Rio is forking out $2.4 billion toward a lithium battery-grade project aimed to be the biggest source of lithium in Europe. And production gets underway in Serbia at that key project in 2026. So consider that. However, for miners, what to watch coming up? Well, there's two major miners to watch, FMG and BHP. On Fortescue Metals, Morgan Stanley is forecasting an 80% payout ratio, expecting FMG to declare a 9% dividend yield. That's based on their current share price of $26.44. However, Morgan Stanley says there's a hypothetical bullish case that FMG could declare a 15% dividend yield. Keep that on your radar. While Morgan Stanley expects BHP to have an 85% payout ratio with a 5.2% dividend yield. That's based on the current share price growth, based on the current share price of BHP of $52.10. Now, Morgan Stanley says there's also a bullish scenario that BHP could declare a better dividend, a 7.3% dividend yield. Now let's move to banks. There'll also be a key focus this reporting season, likely to report a huge turnaround in earnings, the biggest turnaround in earnings in 10 years. But the future is likely to get a little bit murky amid lockdowns. Morgan Stanley says that the big banks collectively have $31 billion of excess capital at bay, ready to deploy for share buybacks. But given COVID restrictions, banks might delay share buybacks until there's a bit more certainty. Now, look, regardless, Morgan Stanley is expecting CBA to report a $5 billion share buyback program to return money to shareholders. Westpac and NAB, they could take a wait-and-see approach. Now, the second element to watch next week, some companies reporting results. On Wednesday, the 4th of August, there's the Bunnings landlord, BWP Trust. BWP, that's the ticker. They're set to report net profit of $114.6 million. On Thursday, sleep apnea support company ResMed, RMD, they released their results and quarterly profit of $174 million US is expected. On Friday, REA Group reports full-year profit of $332 million is on the cards, likely to see strong growth supported by their Mortgage Choice and realestate.com businesses. Now, what's really key here is to watch if the numbers are better than expected and if companies announce share buybacks. That's when you'll likely see a share price rally. Now, the third element, as for what to watch next week, there's a swag of economic news out. Keep an eye on two key elements that could move the market's dial. And that's on Tuesday, the RBA decides on interest rates. Rates are expected to hold at 0.1%, but the focus will be on whether the RBA will scale up bond buying, because remember, the central bank later reeled bond buying back. So we're likely to see if bond buying will be increased, and that will support the Aussie share market. And then on Thursday, the balance of trade is out. This is the difference between Australia's exports minus imports. So given the iron ore and copper price have both surged to record highs, the market is expecting a trade surplus of $10.3 billion. If we get that, it'll be a record, and it'll also support investors buying into the mining sector, who are key beneficiaries of rising commodity prices. And that's the weekly. If you've got any questions, please leave them in the comment section on YouTube. From all of us here at Bell Direct, please have a happy and safe weekend. I'm Jessica Amir. Bye for now.